Hey everybody, Economic Ninja here. I hope you are doing great. We've got great news. It's great. Janet Yellen, if you don't know who she is the little lady that looks like somebody's grandma, and she is the Treasury Secretary. But before she was the Treasury Secretary, she was the chairman of the Federal Reserve, which means she went to school for economics, was really, really smart, probably got good grades, and she learned one skill and one skill only, and that is to not tell you the truth. That is correct. Now, out of CNBC, today's headline, you can't make this up. I get that it's backwards, but I like to look at myself so the mirror is imaged. And it says, and I'll read for you, Yellen says the economy is not in a recession, despite the slump in GDP. Now, that's really exciting. You want to know why? Sometimes it's just fun being lied to, because last week, reality had stated a different definition for the recession. A recession was defined last week as 2 consecutive quarters of lower GDP growth or negative GDP growth, right? That was really how the world worked. That's how it operated until now. Now they decided to come up with a new definition. Now it's interesting. You know what's so awesome about this? It means nothing. Although to some people it means something because they're just going to live life normally. I heard somebody say to me, they said, you know, you've been calling for this crash for quite some time and it's still chugging away. And I said, the crash already started. And we're going to actually show you a news article from 2007 and explain to you what happens when the talking heads come out and warn you that everything's okay. All right? But first, I want people to understand this. Very, very serious times right now. If you're not preparing right now for hard times and you're watching this, what's actually a crack up boom in the economy, you're going to get caught unaware and it's going to blow your socks off. But if you're ready for it, you're going to be able to take advantage of amazing opportunities from all the people that believe the lies. All right, so here we go. So let's talk about Federal Reserve chairmen and what they did in the past. Now I'm going to link this story in the description below because I think it's very, very important. This is also from CNBC and it is from 2007. And back then, Ben Bernanke was chairman of the Federal Reserve. And in 2007, a story came out, and there's lots of them to pick from, but yet this is yet one more lie, and it is entitled, Bernanke, Subprime Mortgage Woes Won't Seriously Hurt the Economy. Now, if you are under the age of, let's say, probably mid-30s, you probably don't remember what happened in 2007. You probably also don't know what happened in 2006 and 2005. What happened in mid-2005 is we started a mortgage-backed security crisis that got bigger and bigger and bigger until mid-2008 when we saw 2 of the largest financial institutions go completely broke, belly up, close their doors forever. That was Bear Stearns and Lehman Brothers. Also in that time, we saw companies like Countrywide Financial and others, a myriad of others, also completely belly up, go bye-bye, all right? Because there was very serious trouble in the economy, especially in mortgage-backed securities. That actually led to the Great Recession. And it was so big, it was such a big recession, they actually had to name it because it had ripple effects around the world. And now what you're experiencing with all currencies inflating to nothing because you're seeing higher prices in every currency on earth, which means the dollar is falling too, all right? I don't care about the DXY because I could sit there next to somebody that cannot run and I'm completely out of shape because let's say they're injured and their legs are hurt and they literally physically can't run. And it's like me saying, look, I'm a faster runner than you. How stupid would that be? I mean, look at me. I'm not exactly a runner. Get my point? Okay, so back here, I'm going to talk about a story about you being lied to in 2007. By 2007, I had sold all my real estate. I'd completely gotten out of my flip business and my real estate investing company where I was holding on to multifamily properties because I knew this was coming. And this was a great example of you being lied to. So we're going to read an old story, okay? It says right here, Federal Reserve Chairman Ben Bernanke said Thursday in 2007 that he didn't believe the growing number of mortgage defaults would seriously harm the economy, and also noted that banks share significant risk when financing private equity deals. And it says, facing criticism from members of Congress about lax regulation, Bernanke also promised that the Fed would do everything possible to crack down on abuses that have put millions of homeowners in jeopardy of defaulting on their mortgages. Interesting, huh? says, however, Bernanke in his remarks did not detail any specific tightening of regulations, saying only that the Fed would hold hearings in coming weeks on the matter. A solid word, Bernanke. Now let me explain a couple things. You want to make the worst investment you've ever thought of in your life? You should buy this dude's book. Because I want to explain something. Ben Bernanke went to all these prestigious schools. He worked his way all the way up to the Federal Reserve Chairman, the head liar. And what he did is nothing. Absolutely nothing. Well, we'll hold a hearing over there and we'll talk over there. And nothing's going to happen. And we're going to lead the country and eventually the world into the greatest recession in modern history. And then, well, you know what, about 12 years later, 13 years later, everyone's forgot about it. I'll sell a book. And they'll buy it. And that was what blows me away. It's akin to pretty much taking advice from Jim Cramer on stocks. Because if you remember, back in 2000, he was bragging about how amazing these .coms were, and you're nuts not to buy this dip. Which, first off, that dip and subsequent little rise called the dead cat bounce, and then to nothing, right? But good news, Jim Cramer was still around 7 years later talking about all of this and saying you're nuts not to buy Lehman Brothers stock. It's a deal at these prices. Guess what? That guy's still on the news too. So my point being is, if you want to make a bad investment, buy Bernanke's book. That is financial advice. We believe the effect of the troubles in the subprime sector. Now, this is a quote from the head of the Federal Reserve in 2007, 1 year before everything collapsed in everybody's minds because it was in the headlines, right? I'm trying to bring you stuff as it happens in reality and show you what happens behind the veil, all right? This is a quote. We believe the effect of the troubles in the subprime sector on the broader housing market will be limited, and we do not expect significant spillovers from the subprime market to the rest of the economy or the financial system. Bernanke said in his remarks, copies of which were distributed in Washington. Good job. It probably took you a long time to write that out, and you were yet 100% wrong. Well, the thing is right now, you're being told by the Treasury Secretary that was the Federal Reserve Chairman, we are not in a recession. Guys, keep going out there, keep crushing it. Keep working like little worker bees so you could put money in your pensions so we could buy more assets and take them from you and then rent them back to you. It's literally what's happening in the background. I want people to be ready to absolutely crush it in this next cycle. You can be sarcastic all you want, and that's sometimes what I use because you feel like you're going crazy. You're the only one in the room that understands what's going on. I want people out of debt, good credit score, with money on the side, and money diversified between cash, because you're gonna need that it's called dry powder for a reason, ready to take that shot, that financial shot. But you're also gonna need things outside of the system like gold and silver, not for bartering, but because they go up exponentially when they bottom during this crash, just like they did a month after Lehman Brothers closed their doors. And very few people own these assets. Gold and silver, amazing during these times. Can they go down farther? Yes, they can, but the problem is, unlike any time that I've seen in recent history, premiums are exploding because the demand for physical bullion right now is getting more and more intense. Can that change in the future? It can. Can I tell you when? I have no clue. The problem is most people think month to month or week to week, and I'm thinking 6 months, multi-year cycles. Get broader in your thinking. Expand your horizons right now. If you need new friends, go get them. If the last 2 years has taught you anything, it's who you should be hanging out with and who you should be showing the back door to. I hope you guys got something out of this. I'm gonna link this story from 2007 in this video in the description so you guys can see what it was like to be lied to in 2007 and then compare them to the lies you're hearing today. Guys, I want the poor and lower middle class to rise up and take advantage of this next collapse. We can only help so many people, and honestly, share the videos out to get them out to more people because I know you guys don't like having the eyes rolled at you, so let them roll them at me. I can take it. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.